Okay, moving right on then, let's bring on board Rashesh Shah to talk a bit more about what transpired in Edelweiss Financial's quarter gone by. Mr. Shah, thank you so much for taking time out to chat with us. Your profits have come in fairly healthy, revenue has also grown and is looking quite robust. Tell us what have been some segments which have aided this strong growth.
See, I think, as you know, our entire business model is a very diversified model, and we always said that the diversified model allows you to weather the ups and downs fairly well. So in this quarter, our retail credit continued to grow very well. Our ARC business also did well in this quarter. We got some new opportunities to deploy money in this quarter in ARC. Our asset management, wealth management business, our wealth management assets under advice have crossed almost 1 lakh crore. Our assets under management in the asset management have crossed about 35,000 crores in this quarter. And insurance also, we had a very good quarter. Our insurance company, ETLI, Edelweiss Tokyo Life Insurance, was one of the fastest growing insurance companies in this quarter. So overall, I think the diversified model, through good times and through bad times or troubled times, it does come of age. It's a much harder one to execute, but I think we are very confident and happy that our diversified model has come of age.
Mr. Shah, hi there, good afternoon. Let's also just talk about the individual businesses. Can you just tell us where all we have seen growth this time around and where do you think we will see the maximum growth in the coming quarters?
I think, as I said, in this quarter, retail credit, ARC, asset management, wealth management, capital markets was slightly flattish. Insurance grew very well. So insurance, asset management, all this grew very well. Going forward, I do believe that our advisory businesses, as we call them, which are asset management, wealth management, capital markets, should continue to grow over the long term because the trends which are driving that growth, the financialization of household savings and all of that, are still very strong. So on that basis, advisory will continue to do well. Retail credit also, we have a 20,000 crore book. We think there is a lot of growth in that also. And overall, though there is some amount of turbulent time around us, I think the long-term India story is not going away. It is intact the way it was. The overall opportunity in financial services is the same. In the next couple of years, we also see a lot of opportunity in ARC, both from getting inflows back from the all the deployment we have because those cases are getting resolved, but we also expect to be able to deploy further money. We see a lot of opportunities in pipeline because ARCs play a very important role in making sure that the NPAs of the banking sector can be converted into productive, revived assets.
The ARC business clearly has done very well. Just want to understand, you have a high exposure to SR Steel. So once the process is done with, how much are you likely to benefit? And also, do you think RUIA's offer should be accepted or the COC should stick with the Arcelor offer? Just as somebody who has been a part of this industry for so long, just give us your comment on that if possible as well.
Our ARC has been accumulating SR debt from many banks, and we are now among the top 3 or 4 total creditors to SR Steel. We expect that the flow should come in over the next 3 to 4 months because this process will get closed. We are hoping, and the banks are also hoping, because a lot of banks want to close it in the December quarter, but we are hoping somewhere between December to Jan, this process should get completed. The new offer that the SR promoters have made, which looks very, very interesting, 54,000 crores, I think it is something new. I don't think there is a formula for that, and our view is that the courts will have to decide whether that should be considered, how it should be considered. And I think a lot of this process now, since it's happening for the first time, the courts will have to set some precedent on that, on how to accept offers which are higher, because obviously that higher amount of funds is always attractive to banks and other creditors, but also how long should this process go on, the courts will have to decide. So I think in the next couple of weeks we will get an answer or a direction from the courts, and the creditors committee, what is called the COC, will abide by that.
Okay. So also just want your view on the entire, concerns that the NBFC sector has been completely, overshadowed with in the recent past. How are you reading into the current liquidity situation, and how much liquidity do you have, and how will your ALM position change if RBI's norms are further tightened?
I think in our case, we have always maintained something called liquidity cushion, which is about 10% of our assets and about 11-12% of our liabilities. So we have always made sure that we have enough liquidity cushion on hand, and this is usually G-Secs and cash and all that. So idea is always to have part of your balance sheet as very liquid, unencumbered liquidity available to you. Over the next 6 months, we are fairly okay from the liquidity cushion and what we call the liquid assets we have, against which we can raise money, or we can raise money by liquidating those. We have enough funds to meet all our obligations up to March. That is what we filed with exchanges. So in a way, it's okay. But obviously you want the liquidity situation to improve, because you want to raise fresh money, online it to customers, get the business engine going, which is good for the economy also. So I think RBI has pumped in enough liquidity. So the liquidity at the system level looks fairly robust. It has to start flowing to the NBFCs, which I think over the next few weeks should start slowly flowing back. We have already started seeing that. The last 2 weeks, a lot of issuances have happened, some money is coming back, and I would say currently the activity is maybe about 40 to 50% of what was normal activity, and by December I would hope that we should get back to at least 70-75% of normal activity, which will be good enough, because that will give enough room for NBFCs to keep on extending credit to their customers and keep the engine going. So I remain positive on that. We have gone through this kind of phases before. 2008 was like this, 2013 was like this. So this has been tested, and even this has been a stress test on liquidity management, ALM management of various companies, housing finance companies, NBFCs and all. And I do think the industry will emerge stronger as a result of this.
And so just before we let you go, one last and very important question. Could you tell us how much exposure you have to IL&FS in terms of the builder and the developer refinancing segments, and how much provisions will you have to make because of your exposure to the company?
So IL&FS, we have no exposure. We have had zero exposure to IL&FS. On the what we call the real estate development sector, we have almost about 12,000 crores of our book on that. A large part of that, 2/3 of that, is what is called construction finance. 95% of that book is in housing sector, because we do think housing is a good asset, because houses get bought, so it is a very self-liquidating asset. Over the last few years, we have funded more than 100 projects. A lot of those projects are on stream, they are doing well, and our overall asset quality is under control. We don't think, as long as the economy continues to grow, as long as liquidity is also okay, home loans are being given by banks and others, we don't think home sales will come down. And if home sales are not coming down, the real estate sector should be all right, because ultimately in the housing sector, the key important variable are people buying homes. And fortunately, last 5 years, house prices have not gone up. There has not been a real estate bubble in India, that people were investing into real estate just as an investment, not for end user. A large part of the demand in houses, in home buying, is with end users. The investor segment is not there. So there are some positives on this segment, which gives me confidence that hopefully asset quality should remain stable, but we will only know in the next 5-6 months how Indian economy fares, because I think economy started improving, and I hope the oil price comes down, which is very important for Indian economy.
Sure, sir. Thanks so much for taking time out to explain to us in detail about the exposure that you have, what the way ahead is, what's the growth you're targeting for Edelweiss Financial going forward. With that, we'll slip into a short break. More lined up on the other side.